Good morning, everybody. And let's look at the daily plan and see what the day might look like. And I had forgotten all about the ADP jobs report, which apparently the market was a little not thrilled with, but nothing, not like a big, not like a big 20-point down bar. Maybe a quick buy the dip for you scalpers. I don't know. Seeing a little green shoot here, but that's neither here nor there. Let's get to where we are. All right. So quick context of how we got to where we are, so to speak. So we reclaimed the 20-day moving average yesterday, I believe it was, yesterday. And that's somewhere around here. And after we reclaimed the 20-day moving average, that helped with some algo buy triggers on Monday. Yesterday we opened above 6,800. Well, we were above 6,800, yay. And then we kind of broke down right toward that 20-day moving average, and then buying pressure ensued. We also have a situation where a lot of the sell-off was due to structural factors, systematic trades, selling, trend-following hedge funds, CTAs, volatility control funds. It was kind of like a vicious cycle, reflexive loop of selling. And when we reached the crescendo on Friday, a lot of that reversed. And now we're sort of in a no man's land with that. We did get a little bit of what I understand to be buying later in the day yesterday, like around here, like around 1 o'clock or so, that was, related to leverage ETFs, like TQQ or SPXL, or the leverage ETFs and the individual stocks like NVIDIA or whatever, having to adjust their mix, we'll call it, and end up having to buy into the close. We saw the exact opposite last week with them having to sell into the close. Now, they have discretion what time they do it, so we don't know, are they going to do it at 2 o'clock, 1 o'clock, 3 o'clock, but that's kind of what they do. And typically, it's not going to be enough to move the needle, but on days that were kind of outsized up days like we had the last few days, or outsized down days like we have during the week, that just adds pressure in the prevailing direction of the move on those days. So just a little asterisk to keep in the back of our minds. I'm sure everybody that's listening already knows that the government shutdown thing was the ending of it, whatever, was a catalyst Sunday night, and we gapped up. Kind of retook that 20-day in that process, and we really haven't looked back that far yet. Switching gears. Okay, so let's take a quick look at my roadmap, and then we'll get a little more linear, a little more granular. So this is the trading view string that my subscribers get, and this is nothing, how should I say it? This isn't auto-generated by options data, quant pulling shit together. This is my looking at the charts, looking at the gamma setup, and these are literally the levels that I type in, and then ChatGPT turns my words into a string. So that's what this is. And I use round numbers, 5 lots. That's why they're always going to be on 5 lots. Anyway, so the reference point was 68.20-ish, kind of where we were trading when I wrote it. And if we break above 68.20, with 68.15, if we break above 68.20, and we'll look at it in a minute, we go into a potential acceleration zone up to 68, 35, 30, 35. And I'll talk about the 68.40 in a minute. Below us, similar to on top, only but a little different, gamma is thin. There's really nothing much down here from the gamma point of view to give us direction one way or another, other than kind of pulling toward the 6,800. Between 6,800 and 67, this is like I kind of make the bottom of the chop zone. And below here, we hit the bottom of the expected move is based on the options prices, which is 67.80, which also happens to be a gamma level, which we talk about. And then if that breaks, there's really nothing much to stop us other than a few like subjective reference points, like the 20-day moving average or Monday's low, down to the 67.50 large market makers short customer long gamma strike, which also has the potential to be a tailwind as that fails to realize and it evaporates. As whatever short hedges are held for that, it's really not that large, so it's not going to be a big push, but it'll be a push. Okay. Yeah, everyone says my mic is muffled, and I'm in Florida, and I don't have my usual setup, and this was the best that I could do today. I'll try to figure something out tonight, or if not, I'll go back to the laptop tomorrow, which I didn't have as many things, quote unquote, as I needed, but at least it sounded better. Are you guys, thanks for your work. You said it. You said it. Especially with my technological expertise, it's a miracle. See, I remember I said scalp it over there. Not that I'm a scalper, but I've been around this business for a while. Anyway, okay. I'm a better scalper on paper than I am in reality because I have paper hands. Hey everybody, the crowd is filtering in. Okay, so here's what I was talking about in my explanation of the daily plan, whatever. Then we'll get back around to volatility and all that. Okay, so trust your eyes. Your eyes are a good filter. What do you see? Biggest line on the chart, 67.50. To the left means market makers hedge in that direction, accelerates the move. So below 67.80, if that happens, an accelerant path down towards 67.50 with this minor shelf down here, that should stop it. Not saying we get there, it's always if-then conditional path. And if we don't get there, then they don't have to do anything. Here's the 67.80, which happens to be the bottom of the expected move, more or less, and 6,800. So we have this kind of support-looking area, reaction zone, 6,800 round number, 95, 6805. Call it a fly-looking cluster below. 6,800 up is basically a market maker long ladder, short ladder, customers long. The only catalyst today we already had, which was the ADP numbers, which seemed to be Algos decided to sell it and then Humas decided to buy it. And it could have been like a volatility reset, whatever. So no, we have two Fed speakers today. And I think that they're sort of have a history of being dovish, so I'm not expecting, and we know expectations, well, never mind. I'm not expecting, that doesn't mean that, I'm not expecting, a tape on from them. So over 6,800, we have this little notch here at 68.20, kind of where we are. So here's another little zone here, but if over 68.20, if we can get on our horse a little bit, we have this nice ladder up Are we cutting rates into all-time highs? I certainly hope so. I certainly hope so. Let's add liquidity and, we'll worry about it next year. Yes, we're cutting rates into all-time highs. So 68.20, we have a ladder. In theory, 68.40 should be a nice little accelerator move if we can get it moving, which was basically yesterday's high. Looks like people bought calls and bought options right near that high there. Or laddered all the way up to 68.70, where we have the sellers stepping up. And then way above, like up here, 9,200 is where we have the 100 wide gang who sells them cheap a day, like 1 DTE, and they sell them 100 wide, they sell them for 10, 20 cents, whatever, and they're kind of always there providing that floor or that ceiling, and they usually don't really matter much, except some days they do, like yesterday, I believe it was, when they sold calls on Friday, or maybe it was on Monday, when they sold calls on Friday, and then we had a big gap up, and suddenly their calls were near the money, and they have to adjust sometimes. So what we see here, let me link this with this. Okay, so what we see here, the red is market maker short gamma. So potential attractant all the way up. So potential attraction, acceleration all the way between 68.20 to 68.50, 40 with like a path of least resistance along the line from whatever this is, from 25.30, kind of grinding up with that ladder. Similarly, if we break below 6,800, we have that other path down towards 67.50. Both of those are somewhat extreme, and basically the zone we're in is thin. So in a way, you can almost say we're free to trade on whatever else we trade on technicals, on fundamentals, on whatever else it is, without much interference from market makers other than accelerating the move somewhat in either direction. So I guess that is interference, isn't it? And so that's where we are. That's where we are. Okay, so yeah, okay, yesterday I think everybody knows, but I'll say it anyway, that the AI trade, which were, and the Mag 7, which were dead last week, have now come back to life. I know that's really surprising. We haven't seen this movie ever before. And QQQ outperformed, RSP equal weight underperformed. The same story over and over again, rinse repeat. It's always a question of when, not if. What else do I have here? Oh wait, why am I showing that? I want to be showing, okay, yeah. Let's go back to here. Let's look at the volatility. Okay, let's look at the old 6 panel. And what happened yesterday, we know on Friday, we had that spike peak. 3 points down from a local spike peak is a McMillan buy signal, so in theory that triggered. Now we're below 18, and that's important. I'll show you why in a minute. The 9-day VIX, which had been kind of keeping pace with the VIX, it was a point off, is now back to, what is it, like almost 2 points, a little bit more normal of a difference. So the volatility space, which had gotten just kind of crazy unbalanced, is beginning to get back into some sort of semblance of normal. VVIX a little bit below 100, VIX below 18, but still room to go. VIX 18 is no bargain. Remember, we were down, VIX 16 and VIX 17, 18 were big sell signals. So you look what happened when we got to VIX 17 and 18 going from the other direction. That's why I always like to explain to people, you can't use resistance support on VIX. VIX is math. It just depends on the calculation. It's not that this is a support level and the stocks are going to go up or down because of what happened here. It's math. It's just relative to the mean reversion and to itself. Skew, and so people aren't buying skew anymore, aren't buying, the whole risk reversal setup is shifting where, and you can see that by VVIX. They're not buying puts anymore. Core buyers are starting to step up. We're over 6,800. Seasonality at our back. And so I'm not saying it's a straight shot to the moon, but there's tailwinds brewing. And that shouldn't be a surprise to you because everybody just saw a big 2-3% rally in the last couple of days. So I'm not saying anything that you don't know, that you haven't already seen with your own eyes. And here's the VIX-VVIX ratio that I like to look at. And basically what it's saying is normal. We're not all the way up here with just complacency. We're about to go down, which we did. We're not all the way down like near the 5s, which is kind of tends to be where we bottom. We're in a normal-ish, but room to go up on this metric. And so that's what's going on in the volatility space. Let me see if there's anything else. Fed earnings season is unwinding. We're getting a lot of the meme stocks now. And I'm in some of them, not denigrating the meme stocks. Some of the quantum computing names, some of the momentum names. And I like to look at them for a lot of reasons. One of them is just as a risk-on barometer. How are we doing? Is the market, what's this? This is a toy that I have for evaluating individual stocks that I was playing with. We're going to have to look at that. Single stock, there's another one, another toy for looking at single stocks. I have SPX on there, but could do it for other names. So that's just for fun. Let's put Tesla on there. It's a mess, not showing anything. And it's trying to just begin to turn. Okay, let's stick to the presentation, dude. Okay. Let's get back to where we are. Here we are. Okay. And so, all right, so we looked at the volatility stuff. Expected move. Let's talk about the expected move. So as many of you probably know, the expected move is simply calculated looking at the option chain. So it says here 32.93 plus or minus from where we are. However, I don't trust Tasties, what they say before the open. Actually, I think Thinkorswim's better. But an easier way to get something that more approximates the live is looking at E-mini. Okay, so E-mini is saying 26.25. So let's see, let's round and say 25.30. So 25.30 from where we are, which is around 20-ish, right? 15-ish. So 25.30 puts us down in that risky area. So if we get to the bottom of the expected move, which has changed now from what it was in the morning, that opens the door for some more downside. On top, the expected move, we just said, 25, which puts us in the acceleration path of the 68, 35, 40, that ladder of market makers short calls. So that's what the expected move is showing us right now. Seems to me, just based on the whole setup, that we're due for a consolidation day. What do you guys think? Like, we've outperformed the expected move. Realized volatility has been crazy, although technically on Friday it wasn't, because we opened around 68.20 or whatever it was on Friday, and then dropped 100 points, or however many points, and then bounced back 100 points. So the expected move was, we were only up 8 points or something. But I realize volatility is close to close, but there was plenty of intraday volatility. Yeah, it feels like a condor day. Yeah, so speaking of condors, funny you should mention that, because that happens to be, now, I did some condors yesterday. Whoops. How do I do this? Trade tab. Okay. So I already have a whole bunch of crap that I did yesterday. And these look very good, ready to come off. 68.90. These are ready to come. So my wide iron condors, everybody yells, they're too far away or they're too wide, whatever. Well, they're gonna pay. So what would I do today? Great, you did that yesterday, Doc, you're a genius. What now? Okay, so let's see what now. I sure don't want to be near that 67.50. I really don't. It's only a 7 delta though, so we can think out loud here. So if I went, same one that I was short yesterday, and went 15 wide, 50 cents, not horrible. Not horrible. If we went a little further away, also not horrible. I would throw one in there. And I'll also try to get some narrower ones in. And on top, we know we're going to store at 65, 70. See, here I bought I saw that structure yesterday, that 40, so I bought a cheap fly, hopefully to take advantage of that acceleration up. If not, not. So 68.70, the one I'm short, I would sell that again. 65 if I had to, So if we go the old 15 wide, 40 cents, that's not horrible. That's not horrible. As far as, it looks like I bought a put fly yesterday too. Yeah, I think I saw the setup. So I bought a put fly and a call fly yesterday, cheap. These tend to be pretty forgiving in terms of you don't lose a lot or make a lot if you're wrong, unless you like to sit there and hold them all day. And so now if I were to sell 5 wide, or 10 wide, let's look at a 5 wide fly. 5 wide fly, I already have one right here. 75, 70, can even go a little further away. So this one is kind of the buy the book around the third the width of the spread. 65, 75, 70 on the bottom, and something like you'd probably have to go 60, 50 on top, 65 on top, something like this-ish would be a decent 5 wide. You might want to take it a drop closer. Play in those areas, always mindful of the potential acceleration here and how it gets thin below 67.80. Gotta be mindful of that. Okay, with that said, I'm going to turn the mic over, and we're going to talk about scalping futures. And here's the same levels just corrected for E-mini.
All right, can everybody hear me?
Yep.
Hopefully the audio is a little bit better. Let's talk about ES right now, guys. I'm with you, Doc, that I'm seeing a little bit of consolidation. First things first, the main thing that I'm watching for with ES, I'd like to see if we're going to see downside. I'd like to see 68.20. I think that'd be a good place to target downside and also potentially find a reversal to some upside down there. If we don't get down there, I'll be looking at 68.30 for a potential reversal to the upside. Those are my current two targets on downside. Now, in order for those targets to be valid, we have to be holding below 68.45. If we can hold 68.45, then those two targets, I think, are in play. Should we hold above 68.45, I'll be targeting 68.50, and then yesterday's high at 68.67. Really need to see if we hold above 68.45 first. And if not, then that'll kind of be my compass for today.
Makes sense. And the levels that were mentioned were all marked as having gamma reference as well.
Good.
Now, just for fun, I threw in the NQ string that I get from some other guy that lets us use it, very generous. Di Filippo, and so here's his NQ levels. I know you like to trade this wild animal. What do you see on NQ?
So let's talk about it. On NQ, I'm seeing 25.555 as a good target / reversal point down there.
Okay.
If we can hold below that, I'll be looking at 490.
Okay, so he doesn't have any of those lines. He's fired. Okay.
If those targets are valid, if we hold below 620 at open.
620, okay.
If we can hold above 620, I'll be targeting 670 and then 715.
Let me try something else here. Let me see what mental cues levels show. Very similar levels. Okay, there's no real pony in the gamma world on that. Which doesn't surprise me because there's not a lot of volume there and open interest notional, so you're not going to really get great granularity with the NQ. You might get a little bit, but QQQ would be a better reference, and you'd have to transpose it.
Right.
Because QQQ has a lot of, a lot of open interest and volume and action. And I know a guy, he was supposed to come on today, I don't know where he is, Vol Trader, who has his conversion stuff from QQQ and uses that in his NQ scalping. He's also a crazy person like you and likes to scalp NQ. So I don't really know how to convert this, so we're just going to kind of get back to my knitting. And
one thing that I did want to say, bond market's closed today, so kind of be worth taking it slow, reducing risk, and not expecting too much out of the market. Is kind of how I approach it.
I would like that too. Now, okay, so bond market's closed, okay, so we don't get that whole, what's the word, we don't get the whole, as much of the cross-asset algo craziness. So is that why you're saying that it should just be a little slower because we don't have that extra variable?
Yeah. I personally think the bond market usually adds some kind of liquidity and volatility to the market, at least for a short period of time, and can give us a small catalyst to the next level or whatever it may be.
Yeah, that makes sense. And speaking of which, I haven't looked at it closely recently, but let's take a look at the MOVE index, which is the bond volatility, which has been dead. I guess because everybody thinks they know what's going to happen. We know how that always works out well. Why don't I have it on my list? Come on, man, I should have this on my list. Here we go. So look at how dead bond volatility is compared to July. It's beginning to spice up a little bit here. Well, okay, we got a little bond volatility back. Okay. Now I gotta hit the drawing board and see what that implies. Other than people are kind of buying bonds expecting rates to come down, right? Right. So I guess maybe that's contributing to it. I'm not really sure. I'm not a bond guy. And that's it. Yeah. MOVE is up now. You're right. It had been like dead in the water for a while here, and I just hadn't checked it for a while. But yeah, MOVE is back, so let's make bond volatility great again. So I remember last week, bond volatility was cheap, and I was playing around with some TLT straddles. I didn't do it, but I just kind of like modeling them out for fun, and it was just cheap. It was just cheap. Okay, so that's pretty much it. Just go back to here for a second. And I didn't really do many today, but I just want to show you. Typically, the trades I put in during the day, I put them in, I leave them there. Wherever I put them, I'm going to leave there. And as you see, they filled at the open. These that I did, these were debits. Whatever. I bought a couple of butterflies, a call fly and a put fly. Sold call spreads. Whatever, there were 4 of them. Sold put spreads over here, and they filled at 85 cents. Now here's the button. Here's the closing trades. Here they're closing all the profit. Here they're closing all the profit. Here the iron condor that I put in for about $1.10, closing at 50%, which is what I do for these. Here's the calls, which looked like they were dead. I I closed at $2. Had I timed it better, there would have been $3, but at the end of the day, there would have been nothing because we went through the whole thing. So you kind of have to watch it. And here's some stuff I put in for today at the close. And that's it. So if you're watching and you see the trades and you like them or want to modify them, just letting you know that that's a thing. Letting you know that that's a thing. Okay, so nothing today. All right, that's it.
All right. Lastly, happy Veterans Day to any veterans out there. So appreciate you all.
Okay, take care, everybody. And I put discount links and all that stuff in the chat. Like, retweet, restack, YouTube share, whatever it is, please. Thank you.